This webinar is being recorded.
Hello. Manish sir, am I audible? Hello.
Start करें?
Yes, sir. Am I audible?
हाँ.
Okay. So, good morning, everyone. On behalf of EK Energy Services Limited, I extend a warm welcome to all the participants on the quarter first ending 2025 financial results discussion call. Today on the call, we have with us Mr. Manish Tapkara, Chairman and Managing Director, and we have Mr. Mohit Agrawal, our Chief Financial Officer. I hope everyone had an opportunity to go through the investor deck and the press release that we have updated on the exchange website and on the company's website. A short disclaimer before we start. This call will contain some of the forward-looking statements which are completely based upon a belief, opinion, and expectations as of today. These statements are not a guarantee of future performance and involve unforeseen risks and uncertainties. Today, with that, I would like to hand over the call to Mr. Manish Tapkara for his opening remarks. Over to you, sir.
Yes, thank you, Idisha. Hello, everyone. I extend welcome to all of you. We are grateful to have you with us as we discuss EK Energy Services Limited's performance for the first quarter of FY24-25. Joining me on this call is our Chief Financial Officer, Mr. Mohit Agrawal. I hope you have had a chance to go through our investors presentation and press release, both of which are available on the stock exchanges as well as on our company's website. This quarter have been marked by significant strides, strategic expansions, and strong financial performance, lying a solid foundation for our future growth as well as this financial year. Winds are finally changing for our industry after the past 2 difficult years. Focus is more on high quality offsets, more regulations and stricter regulations are coming in, which is good news for us and all stakeholders of the industry. International integrity standards getting stricter and bringing new standards have brought depth, credibility and integrity to voluntary carbon markets, further stabilizing them. The Biden's-Harris administration from US government bringing new guidelines and principles for high integrity markets, addressing transparency and accountability concerns. With this, EKI has been one of the biggest beneficiary with improved market and quality conditions. The endorsement seeks to bolster the credibility of carbon credits, which is essential for effectively addressing climate change and maintaining market integrity under increasing scrutiny. The ICVCM announced the first carbon crediting methodologies that meets its high integrity core carbon principles earlier in this quarter. This means that the high integrity CCP label can now be used as on an estimated 27 million carbon credits generated by projects that tackle certain greenhouse gases by capturing methane from landfill sites and by destroying ozone depleting foams and refrigerant gases from discarded equipment such as refrigerators and air conditioners. Another 27 categories of carbon credits, representing over 50% of the voluntary carbon markets, remain under active assessment by ICVCM. In addition, certain other methodologies addressing landfill gas and ozone depleting substances covering an estimated 4 million more issued credits are still being assessed. EKI's extensive experience in developing and managing high quality voluntary carbon offsets from the projects, coupled with our deep understanding of the global carbon market allows us to support various stakeholders as they navigate this transformative initiative. EKI is committed to playing a proactive role in facilitating India's ambitious clean energy transition and achieving its climate goals. We are not completely out of the waters yet, but the tides have already started turning back, reflecting in our results. In 2022, challenging macroeconomic conditions and geopolitical situation, especially in Europe, shifted focus from demand of carbon credits, and conditions in 2023 continued on the same path. However, as the situations stabilize, we have begun to see an upward trend. Our entry into the power trading has yielded exceptional results, contributing a big chunk in form of INR 136.20 crores to our consolidated revenue. This new business vertical has not only diversified our revenue streams but also positioned us as a key player in the evolving energy scene. One of our most ambitious services is decarbonization. We offer comprehensive end-to-end solutions for both sellers and buyers of carbon credits. For sellers, we handle everything from carbon credit project identification to registration and finally getting the verification to get the issuance of the carbon credits. While for the buyers, we help determine their carbon footprints and facilitate their journey on a low carbon pathway to get decarbonized and achieve carbon neutrality and net zero goals. Our services include green power transition, biogas system supply, improved cook stove supply for offsetting sustainability reporting, and various other services. We also leverage advanced AI tools for our associate. Those solutions to ease the decarbonization journey for our clients, helping them achieve carbon neutrality for their residual emissions. We are proud to announce our plan to adopt sustainable finance disclosure regulation, which will enable us to assess European investors for our climate positive initiatives. This aligns with our goal of providing decarbonization products and services that help our client achieve net zero and carbon neutrality goals. We welcome the release of recent India's detailed compliance carbon market regulations under the Carbon Credit Trading Scheme 2023, which comes under Energy Conservation Act 22. This development marks a major step forward in India's journey towards achieving its ambitious climate goals. India is a large and growing economy, so the CCTS is likely to create significant demand for compliance carbon credits. This would lead to a rise in carbon prices globally in the compliance markets, which would incentivize further emission reduction efforts worldwide. By establishing a clear framework for mandatory emission reduction and credit trading, the Indian carbon market will unlock a wave of new mitigation opportunities across various sectors, driven by both public and private entities seeking to meet their emission reduction targets. This will contribute to India's NDC goal and global climate change mitigation efforts. The increased focus on carbon reduction has the potential to spur innovation in clean technologies within India. These advancements would benefit not just India, but the entire world. EKI remain resolute in its commitment to clean energy initiatives. Our investments in clean energy efficient cook stoves, coupled with the recent milestone of registering and issuing Asia's first improved biomass cook stove project under the Vera Sustainable Development Verified Impact Standard, also called as SD Vista standard, show our dedication to driving sustainable solutions. A large chunk of these investments have started to give revenues and are going to do more for us in the coming quarters and for rest of the financial year. Our new Bio-briquette production facility in Dindori of Maharashtra, India, have successfully supplied over 200 tons of bio-briquettes, demonstrating our ability to create concrete impact. Bio-briquettes do not just improve environmental health, they improve in communities by transforming waste into valuable resource. They create job and reduce pollution. Fossil fuels can take a back seat with bio-briquettes. This rather green fuel source cuts dependence on the dirty energy and paves the way for a cleaner future. From healthier families to thriving communities, biobriquettes offer a sustainable solution. They benefit society, the environment, and the economy, creating a win-win for healthier, more prosperous world. We are excited to announce our strategic partnership with the Fari Solutions based at Azerbaijan. This collaboration will boost our carbon credit processes, fortify our competitiveness, and contribute to the global climate action. Our AI-powered ESG compliance platform, ESGPro.ai, launched through our associate WOCE Solutions, is a testament of our commitment to innovation and empowering businesses in their ESG journey. International integrity standard getting stricter and bringing new standards, having brought depth, credibility, and integrity to the international voluntary carbon markets, further stabilizing them. The Biden-Harris administration from US government bringing new guidelines and principles for high integrity voluntary carbon markets, addressing transparency and accountability concerns. With this, EKI has been one of the biggest beneficiary with improved market and quality conditions. The endorsement seeks to bolster the credibility of carbon credits, which is essential for the effectively addressing climate change and maintaining market integrity under increasing scrutiny. While our Q1 results are promising, we are mindful of the recent global economic challenges and their potential impact on various sectors. However, based on our strong fundamentals, strategic initiatives, and the growing demand for sustainable solutions, we are super optimistic about our future growth trajectory. The carbon market is witnessing significant transformations. The merging of compliance and voluntary carbon markets, coupled with increasing regulatory scrutiny, presents both opportunities as well as challenges for us. A strong outcome at COP29, Conference of Parties meeting number 29, which is going to happen at Baku, Azerbaijan, at the end of this year, with renewed commitment from participating nations, could bet confidence in the carbon markets as a viable tool for emissions reduction. This has a potential to increase international cooperation and harmonization of carbon market rules, facilitating smoother trading and market expansion. Ambitious climate pledges from countries at COP29 as expected could translate to a higher demand for carbon credits to meet nations' nationally determined contribution targets, which they had submitted to United Nations Framework Convention on Climate Change. This would drive up carbon market prices and incentivize investments in carbon reduction projects. COP29 is likely to focus on stabilizing stricter guidelines for carbon market accounting and verification processes. This would promote transparency, improve the integrity of carbon credits, and attract more participants to the market, eventually benefiting established players like us. The Carbon Markets Association of India is also set play a crucial role in the upcoming quarters as India towards operationalizing its national framework for the Indian carbon market through Carbon Credit Trading Scheme 2023, CCTS 2023. CMIA is continuing bringing together diverse stakeholders in the Indian carbon market, facilitating knowledge sharing, collaboration, and addressing challenges related to the CCTS implementation, along with the offset mechanism which Government of India planning to implement, also be the India's voluntary carbon market. It is also raising awareness about the ICM and its benefit for businesses and the environment, while educating the public on carbon offsetting and the role of carbon markets driving broader societal support for climate action. EKI is well positioned to navigate this evolving industry and capitalize on the emerging trends. Given its firm footing at the moment, EKI has mobilized around 2.4 million carbon credits in the quarter one. It is promising start for us. Looking ahead, we see big openings to continue our growth trajectory. We are prepared to meet the increasing demand for high quality carbon credits and are excited to drive change through innovative solutions and our expanding portfolio of services and projects. While our quarter one results are promising, we are mindful of the recent global economic challenges and their potential impact on the various sectors. However, based on the strong fundamental strategic initiatives and the growing demand for sustainable solutions, we are super optimistic that our future about our future growth trajectory. In closing, I would like to express my sincere gratitude to our employees, clients, stakeholders, shareholders for their unwavering support. It is their passion and commitment that has fueled our success so far. Thank you for joining me today, and I look forward to sharing our continued success with you in the future, in continue building a sustainable future. With this, I hand over the call to Mr. Mohit Agrawal to discuss the financial performance of our organization. Thank you.
Thank you, Manishji. Thank you, Itisha, for giving me opportunity. Thank you and good morning, everyone. Turning to our financial performance for the first quarter of financial year 24-25, our standalone revenue for quarter one is rupees 41.68 crores, reporting a profit of 3.48 crores. Standalone operational cash flow of the company is rupees 61.84 crores due to reduction of advances to creditors, realization from inventory and trade receivables, and other measures taken by the management. We anticipate substantial revenue booking from cook stove projects due to the issuance of credits during the remaining period of current financial year. Our subsidiary, GHG Reduction Technologies Private Limited, the manufacturing arm of the EKI Group, is manufacturing biobriquette at a reasonably good rate, resulting in contribution to farmers' income along with upward sale of the briquette as an alternative to fossil fuel. Our other subsidiary engaged in power trading business has also turned a profit during this quarter, which is around 47.66 lakh of profit for the quarter one financial year 24-25. The company has taken multiple measures to strengthen the internal financial controls within the organization. The company is committed to robust corporate governance also. Finally, we would like to emphasize that we are a debt-free company at both standalone and consolidated level, except for negligible amount of vehicle loans which are being used for business purposes. Our liquidity position is also very robust, providing the company with a competitive advantage for future expansion and diversification, ensuring the sustainable business growth. Our standalone liquidity is rupees 177 crore and consolidated level 208 crores in the form of mutual fund, fixed deposits, etc. As a part of the management team and leaders in the carbon market, we assure all the stakeholders that our industry will overcome current challenges and thrive in the near future. Thanks to all the stakeholders for their support and confidence on us. We are happy to answer the queries of our stakeholders now. Over to Itisha.
Thank you, Mr. Manish Takkara and Mr. Mohit Agrawal. Anyone who wish to ask the questions may kindly raise their hand or type the question in Q&A section. We also request to all the participants to please limit the question to one question per participant, seeing the time limit. Thank you. So now first question we have from Mr. Chirag Jain. Chirag, I request you to kindly unmute yourself.
Hello,
Hello.
am I audible now?
Yes.
Yeah. Hi, sir. Thanks for the opportunity. Sir, I had two quick questions. Because we are focusing on multiple revenue segments, don't you think that we are losing out on the key segments like advisory business, which has no fixed asset requirement, and we are moving towards asset heavy business, which has much lower potential compared to the advisory business, which just gives you higher margins without any fixed assets. Something like, can you give some clarity on that thought?
Yeah, so as you know, our main business is to support or the core services with which we are working for last 15 years is to support carbon credit project sellers to develop their project for getting the registrations, verifications, and then ultimately getting the issuance of the carbon credits. And for the buyers, we are working to determine their carbon footprint and support them to have low decarbonization pathways, and finally giving them the carbon credits to achieve carbon neutrality or net zero goal. So whatever the new services that we have started is totally to support the decarbonization pathway, because various buyers are there. Once we do help them to determine their carbon footprint and have their full plan prepared on how to get decarbonized or how to reduce their emissions, whatever they are doing. So they always ask us from where they can get the green power, from where they can get the green fuel, how they would be able to do the sustainability reporting with the help of softwares, or record all the data that can be captured with the help of software from AI or API enabled meters. So whatever the services that we have added is to support the present clients for their decarbonization pathways, and it will not create the additional pressure on our business development unit or marketing or sales unit to acquire more and more clients. But for the same clients, we are trying to expand our services to support our top line, bottom line, and further to support their decarbonization pathway. So that is the exact plan we do have.
So just to clarify, we have good chunk of revenue coming from advisory business. Am I right?
Definitely, that we are not going to reduce that specific service. That is the core expertise we do have.
So can you give a percentage-wise split?
Mohit?
Yes, I will give you Chirag. Consulting business, you mean to say the carbon credit business, which is the core business for us. And as we have earlier also stated that we are charging as a comprehensive income to any client, not as a consulting separately and carbon credit separately. What Manish is telling, that carbon market, carbon credit is our core business, and all the businesses, other business like power trading and others are complementing the core business. That is the thing.
So, sir, I wanted the split of revenue. Why the split you classify your revenue into from three types. First being consultancy, second being ESG, third being project development. So, can you give the percentage split for that?
Okay. I understood. If you will refer the segmentation report, you will find out the two verticals, and the consulting business, which you are talking about, ESG and others. That business has started in last 9-10 month or 12-month period. They are having a minuscule income, minuscule participation in overall turnover. That is somewhere around 5 to 7%.
No issues. So lastly, before I can proceed further,
Yes.
because I had some big query, because your commentary seems to be contradicting the other players' commentary. So they are on the carbon credit side. So they are what other players are saying, that end customers, for example, a Varun Beverage wants to buy something like carbon credit. So they are pressurizing more and more on the plastic recyclers to get their margin same. So earlier they would get 11%. So now what they are trying to do is pay around 7-8% to the recyclers and 2 to 3% to the carbon credits. So they aren't trying to increase the carbon credit price, because the supply is massive and the regulations aren't so binding on them to do it for it. So I was just trying to figure out, the commentary seems to be very contradicting on that part.
Actually, I'm not able to understand the example which you had quoted is related to, I think, EPR, extended producer responsibility for the plastic or for other different products that need to get recycled. So our carbon credit is somehow different from the green credits or the EPR credits. And for any company, for their residual emissions, the example which you have quoted is related to
EPR.
the recycling obligation. Yes, recycling
Yeah.
obligation for the whatever the plastic any producer or any company is inducing in the Indian market. That specific example is related to that. But the business, although we also provide the EPR services, although the contribution into the top line and bottom line is very small, because recently we have started that specific activity. But for the carbon credit, the thing is, whatever the emissions that you are doing, try to reduce as much as you can. And for the residual emissions, clients used to buy, or the buyer used to buy, the carbon credits from the international voluntary carbon market. So there is no any obligation on how many tons of CO2 or how much percentage of the emission reduction they should reduce, or they can buy the credit. So there is no any obligation at all within any international global standard or international or global standard within our carbon credit business.
So just to clarify, I wanted to imply that if that's happening with EPR, so why wouldn't that happen with the carbon credit or market also? Because we have seen that in the past 2 years.
So what is the obligation which had been given under the EPR? So like X percentage of whatever the plastic that had been in use need to be recycled with the compulsory level, and for the remaining one, someone can buy EPR credits. Is it the same?
Yes.
I haven't heard about such kind of government obligation that X percentage of plastic should be recycled by the inducer, and some percentage they can buy in the form of EPI credits. Although I've not heard about the same, but we'll do recheck. But in the international voluntary carbon market, for the companies who are looking to buy carbon credits to achieve carbon neutrality or net zero goals, there is no any obligation at all at the present scenario.
I have many further questions. I will let back in the queue in the
Sure.
interest of-
Yes.
Thank you, Mr. Chirag. So now next we have Mr. Kaustubh Bubna. Sir, please.
So I mainly wanted to understand what is this power trading business you're doing. I feel like it's contributed meaningfully in your top line. So could you understand the nature of could you explain to us the nature of the contracts and exactly how you plan to scale this business? What are you exactly doing? Could you explain?
Yes, thank you, Mr. Kaustubh. So we basically provide advisory services, trading and investment services into the international voluntary carbon markets or the international voluntary carbon credits. So there are two different entities with which you work. One is the seller of carbon credits. Another one is the buyer of carbon credits. Definition of carbon credit is 1 ton carbon dioxide.
Sorry, I don't know if you got my question. I was talking about this power trading, the power trading business.
Okay.
Could you explain it says that you incorporated a subsidy to do power trading, and that has contributed meaningfully, right, to your earnings this quarter?
Yes.
I was asking more on that. Could you explain to me what that part of the business is, and how come that has contributed suddenly this quarter, and what are you exactly doing in that business, and why do you think it will contribute meaningfully for the rest of the year and years ahead?
Yeah, so as I was mentioning during the earlier question, we are looking forward to support the buyer of carbon credits, not only buy the credits for their residual emissions, but also supply them the green fuel in the form of briquettes, in the form of green power. So that is why we had incorporated a new company with the name of EKI Power Trading Private Limited. We have got the license from Central Electricity Regulatory Commission for trading of the electrical energy within Indian borders. So that is the exact business we do under that specific domain, and we are intended to buy and sell electrical energy, basically focus on the green power generated from these renewable energy projects like solar, wind, hydro, biomass, biogas power plants, and either with the help of spot trades or with the help of forward trades or through the exchanges. So these are the three different activities we would be doing. So it is quite similar for us as compared to the carbon credit trading in the international voluntary carbon markets that we do. And this specific subsidiary had contributed significantly during Q1, because during last financial year it was not very much operational in nature, but during the Q1 it got operational, and now we are looking forward to support the buyers or the clients who are looking to decarbonize their own productions or throughout their supply chain. So that is the exact business activity we are looking forward to do that with that subsidiary.
Could you, if it's possible, could you explain in detail one contract that you've got, so I get an understanding of exactly who your customer is? Because you say that this business is going to contribute meaningfully to the bottom line this year and in the coming year. So how do you plan to scale this? I mean, what type of numbers do you see from this business? What are the unit economics of this business?
Yeah, so with the buyers of the carbon credits, we first help them to determine their carbon footprint. So that means how many tons of CO2 they are emitting. Then the second step is we support them to reduce their tons of CO2 that they are emitting. So with the help of supply of green power, which is generated from the renewable energy projects like solar, wind, as I mentioned earlier. While the companies, if they use green power, their emission, their scope 1, scope 2 emissions used to get reduced drastically. And so the requirement to buy the carbon credits at last would be reduced. Although for many clients it is not very easy to procure electrical energy from renewable energy power projects, because each state, they do have different regulations at the state level to procure renewable energy from open access. So we do have many clients in India who are to whom we are giving the sustainability services, helping them to determine their carbon footprint, then decarbonization, and ultimately supply the credits to them. So with the same clients, we are trying to supply this electrical energy. So for each company which is located in India, as of now, they used to buy electrical energy from the local distribution company. They can also buy the electrical energy from the traders like us who had got the licenses from the Ministry of Power, and can do trading of electrical energy and bring in the supply of green or renewable energy to those factories to decarbonize their scope 1, scope 2 emissions. So that is the exact thing we are looking to do, and definitely at the top line to the bottom line, this specific subsidiary will contribute very significantly in quarters to come or next financial years to come.
Excellent. And just last question I have from my side on your general carbon credits business. Your standalone entity seems to have turned around on operating performance this quarter. So I want to understand how have the carbon credit rates moved? Last time you had given a breakup of the actual rates in the market. So could you explain how much have they increased or on that sort?
Yeah, actually, you see, during year 2022-23, there was lots of criticism that had been done by the Western world media over quality of carbon credits and over the greenwashing issue. To overcome this specific two issues, a lots of support had been given by the US government, as recently US government had came up with the clear statement that they do support international voluntary carbon markets. Further, two different agencies came into the force. One is ICBCM, which is working to define what is the definition of quality of carbon credit, and another one is VCMI. Both are international in nature. Other VCMI is working over defining how to avoid greenwashing that may be done by a few of the buyers in the Western world, which are based at the Western world. So with these three different momentums, one is from the US government, another one is from VCMI and ICVCM. Now various buyers are there which are coming in the market and now buying the credits at the with the larger volumes. So with that specific three specific movements, we have got the positive numbers in our P&L, our balance sheet.
All right, great. Thank you.
Thank you, Mr. Kaustav. Now we have few questions in the Q&A section. First, we have from Mr. Rampujan. What is the revenue and PAT targeting for year 2025? If possible, give info.
Yeah. Maniji, will you answer or?
Yes, please. Yes,
thank you. Okay. As a listed company, we have never given a guidance in the market, but I will assure you that we are having a strong business model, innovative operational efficiency, and offering coupled with increasing client base, so that we are confident of maintaining growth momentum in going forward. That is the response from our side, sir, for this question.
Thank you, Mr. Mohisa. Next question we have from Vikram Singh. Do we have any existing patent? How much we are investing in R&D and carbon removal technology?
Yeah, so with our subsidiary JG Reduction Technologies Private Limited, we have applied for the patent for the design related to the improved cook stoves. For the carbon removal technologies, we are working towards developing the projects related to the biochar production in India and in various other nations. Further, enhanced rock weathering and the advanced technologies which are there in the carbon removal sector. Although we do have another subsidiary called as Amrut Nature Solutions Private Limited, wherein we are working to develop carbon removal projects which comes from the nature-based solution activities like afforestation, reforestation, agriculture, and mangrove sector. So these are all the activities we are doing in the for generation of the carbon removal-based carbon credits. Thank you.
Thank you, sir. Next question we have from Mr. Yogesh. Is there any chances in future the company will go for new business like renewable energy sector, as we have already entered biogas and power sector?
We do have plans, but it is not very much concrete as of now. But once it will be there, the concrete decision will be taken by the board of directors. Definitely, we will do inform to the stakeholders of us.
Thank you, sir. Next question we have again from Mr. Vikram Singh. How much scope in terms of number we can see after launch of India CCTS, or revenue potential for EKI in India after CCTS?
Yeah, so CCTS means a carbon credit trading scheme, wherein Indian government is going to give target to the large emitters based in India. The capping would be given on per product basis. For example, if there is a steel company or for example, a steel company is there, and if the target, the potential target, for example, if it's given by the Ministry of Power is they can produce 1 ton steel while producing 5 tons CO2. If any specific company is emitting more than 5 tons, then they need to buy carbon credits. If they would be emitting less, then they are allowed to buy carbon credits. So Since India is the third largest greenhouse gas emitter, and as of now, if you see the carbon market potential within European Union emission trading scheme, it is around $900 billion is the market size within European Union ETS emission trading scheme. So once India's ETS will be there in full shape and size, because as of now only the detailed procedure had been given by Ministry of Power. The companies, the list of companies and the target had not been given, so it is not very easy answer that how much would be the contribution from the CCTS to the EKI's top line, bottom line. But as in next 2 to 4 months timeline, I think Government of India will do come up with the clear company list and their targets, and the baseline also, whatever they are emitting. So exact deficit would be able to determine, and probably the revenue contribution from trading of carbon credits and from giving advisory services to determine carbon footprint services and decarbonization pathways, we would be able to give the clear answer in next coming few quarters. Thank you.
Thank you, sir. Next question we have from Mr. Sajan Digwania. What is carbon inventory as on 30th June 2024, units and value?
Yeah, I will answer it. The value of the inventory is 105 crore and units are in approximately 9 million credits.
I hope this answers the question. Next we have from Mr. Nitin Gandhi. Reason for drop in standalone other expenses 8 crore from 15 crores.
Okay. Manish, I will answer this question.
Yeah. Mm-hmm.
Yeah. Sir, as we have inventories in our books of account, and that's why we have not taken issuance of new carbon credits. We have sold the credits from our own inventory. Therefore, the registration fees, issuance fees has been declined quarter on quarter. That's why you are seeing in a decline in other expenses.
Thank you, sir. Next we have again from Mr. Sajan. Same way, what is the same data for briquettes manufacturing and selling? What is the gross margin percentage?
For briquette, we are raw materials are sugarcane trash or some other agri products, and we have a margin of around 8 to 10%. But it totally depends on the pricing going on a daily basis, because due to the seasonality and monsoons, etc., the price are going change on a daily basis, or you can say fortnightly.
Thank you, sir. Next question we have from Mr. Sandesh. What is the current market share of EKI in India and worldwide? Who are the competitors in India and worldwide?
I will ask Manishji to answer on this.
Yeah. So the current market share, sir, if you see the 3 years average in the global carbon markets, we have supplied more voluntary carbon markets. We have supplied more than 20% carbon credits, and in India, it is more than 85%. So that is the market share we do have in India and worldwide, and the competitors in India and worldwide. So global competitors we do have is that the companies are like South Pole or Climate Partner, Climate Impact Partners. These are all the competitors of ours at the global domain. Thank you.
Thank you, sir. Next, we have a question from Mr. Sajan. How many cook stove we have supplied till June, and how many carbon units we will get annually from it? Is it verified and in inventory, or verification and certification is under process? If under process, by when these units will be available for sale?
Yeah.
So as of now, sir, the number of cook stoves for which we have worked are located in India, Ghana, Malawi, and Kenya, and it is approximately 2 million cook stoves we have manufactured and distributed. approximately for each cook stove, the number of carbon credits, depending on the Vera or gold standard, it used to vary in between 3 to 7. And many projects have got approved, but the substantial projects which had been deployed are under verification. So, to get the clear timeline related to the issuance of the carbon credits is very tough, because the BCS and gold standard, they are not able to anticipate the exact timing wherein they would be able to complete their assessment or issuance of the carbon credits. But anytime in near future, those credit will do see the issuance of the carbon credits, and then we would be able to sell them as soon as possible, depending on the market conditions in the international voluntary carbon markets. Thank you.
Thank you, sir. Next, we have again from Mr. Sajan. What is the quantity in units power bought and sold with average unit prices?
I will answer this question. Sajanji, we have sold approximately 17 crore units during first quarter, and average pricing is somewhere around 7.5 to 8 rupees per unit.
Thank you, sir.
We have some hands raised, so we can take now those.
Yes.
Yes. We have in queue with us Mr. Chirag Jain again. Sir, kindly unmute yourself.
Hi, sir. Thanks for the follow-up. Sir, I had a query similar to what you answered previously also, recently, on the government agencies not being able to identify the number of carbon credits per emission. Okay. So that thing I was trying to figure it out, because previously also there was similar thing that happened in EPR, that they players lobbied for the delay in the execution of the timeline period that is being provided. So that affects us. So how do you see that?
I cannot comment over such kind of issues that have been created by the relevant stakeholders, relevant industry stakeholders and the government of India. But as you know, this during just 4-5 days back only, this detailed procedure had been there or had been released by Bureau of Energy Efficiency under Ministry of Power. And as of our information, very soon the list of companies list and their target along with the baseline emission that they are doing will be there very soon. So we do not think such kind of issues may come up in the India's CCTS or the compliance emission trading scheme within India.
Got it. The fixed assets have increased from by approximately 100 CR. So that has been for carbon stove, cook stove and briquettes. Am I right?
Specifically cook stoves.
Okay. So what is the currently quarterly run rate production for that?
So these are whatever the assets are there. Mohit, please correct me. Those had been invested during last financial year.
Yes.
During this financial year, for last, if you see past few quarters, since the turbulence is not there, since the turbulence is still do exist, so the production rate is very slow as compared to what we were doing during last 1.5 year back. So as of now, since the market conditions are improving and the production and further deployment of the improved cook stoves will be there in place very soon. We will do come up with the substantial numbers very soon. It is not as up to the mark which we were doing in the past.
So any percentage or absolute number that you can provide with for a quarterly basis?
As of now, we do not have the ready numbers available with us, but if you do email us, we will be able to give the specific information which we can make it public.
Sure. Sir, last question before I get back in the queue. There was an announcement of CEO stepping down. So can you give some light on that?
So all those specific information mentioned to the disclosure which we have done at the BAC. If you have other information which you need to ask, then kindly do let us know.
Yeah, so that the announcement that you made didn't make it clear that he be continuing with us in the same for the biomass or the recycling part, or he would be pursuing it separately by himself. That wasn't clear made in the announcement. So that's the query.
Yeah, if you do refer, it had been mentioned that he will be focusing over the removal-based technologies, in which, as I have mentioned earlier, also that we are looking to establish ourselves into the biochar-based carbon credits, enhanced like rock weathering-based carbon credits, removal. That means the removal-based carbon credit. So it had been made in the disclosure. It had been informed in the disclosure that he would be focusing on those specific sectors wherein companies looking to grow at much faster pace.
So he is with EKI employed currently. Hello. Hello. Am I audible? Hello. Am I audible?
Yes,
Am I
sir.
audible? So my query is he employed currently with us or not?
Sir, whatever the disclosures which are required as per the regulations, we are disclosing the same on time to time basis. And if you have any specific question, kindly do email us. We will do reply the same to you appropriately.
Sure, I will get back.
Yes.
Thank you.
Thank you, Mr. Chirag. Last question we have from Mr. Nitin. Please give reconciliation of standalone PBT to consolidated PBT, which business has suffered 3 crores loss.
Yeah, Manishi, I'm replying on this question. As we have seen that 3.3 crore approximately for a standalone, and our two subsidiaries, which is GHG Reduction Technologies, and where we have incurred the losses, as well as there is a depreciation loss in Singapore subsidiary because of the projects which was done by Singapore in Africa is registered now, and according to the accounting policy, we have booked the depreciation on them. That's why the major contribution are from these two subsidiaries. Apart from this, Amrut Nature is also contributing losses to us as of now, because revenue will start from 2026 onwards. That's the reason. So these are the breakup for the losses which we have incurred.
Thank you, sir. Next, we have in queue with us Mr. Kaustubh Bubna.
Yeah. Can you hear me?
Yes, sir.
So just back on this power trading business, how consistent will the revenues be going into quarter 2, quarter 3, quarter 4? Will it be lumpy, or do you think the same type of revenue contribution will be there from this power trading subsidiary, or do you think it'll be lumpy? What is the nature of the business? Like
So
in that?
as of now, sir, there are two types of contracts which we can do with the buyers or with the sellers. One is of spot in nature, and another one is the forward in nature. Once, as of now, whatever the contribution that we have got is from the spot contracts or spot trade contracts that we have done. We are looking forward to get into more and more forward contracts till the time the nature would be spot in nature, and so it would be variable in nature.
No, so do you expect this revenue run rate to continue in the next few quarters?
Definitely. We do have good number of inquiries, and since the advantage we do have is we do have very strong client base, and within the same client base, we are looking to provide the additional services. So we do foresee that we would be able to get good number of similar contracts and plus forward contracts also in quarters to come.
Okay, and what really needs to happen in this cook stove project of yours for you to break even and make good ROI on that project? What needs to take place in the industry? Where do rates have to go? I mean, because this is a capital heavy project we've gotten into. So just want to understand what is the best case scenario that has to happen for us to achieve optimal ROIs and for this investment?
So as of now, if you see the forestry-based projects or renewable energy projects had got an high impact because of the criticism that had been done within the international voluntary carbon markets, specifically the Western world media have raised too much question related to the quality of carbon credits. For cook stores, the prices are quite stable during last 1.5 years, and so whatever the credits that will do come, definitely we'll do see very easy return on investment in coming few quarters.
Okay, thank you.
Yeah, thank you.
Thank you, sir. Next question we have from Mr. Ankur Ben. How is geopolitical condition affecting carbon trading business?
So geopolitical issues, if you see the whole turbulence in our voluntary carbon market had got started because of the issue between Russia and Ukraine. Then afterwards, the issue had got raised up between Europe and Russia, wherein Russia had stopped the supply of the gas, natural gas to Europe, and so all of the sudden the energy prices had got very high within the European Union region. Due to that specific reason, the carbon markets, voluntary carbon market, took the back seat, and that is why it is still trying to come up or to cope up from those specific the concerns between the two nations. So this is specifically related to the voluntary carbon markets, while we do have two other different markets. One is the compliance, national compliance carbon markets, like India's emission trading scheme, which is going to get implemented very soon. Those compliance markets usually do not get impacted because of the international issues. And the third one is the international compliance markets driven through the Paris Agreement. Those markets also usually do not get very easily impacted because of the geopolitical issues. So as of now, to summarize, the international voluntary carbon markets are very much influenced because of the geopolitical concerns. But the another two carbon markets, wherein although they do not exist as of now, but in next 6 to 12 months timeline, once they will be there in place, fully operational in place, definitely we will do expand our services to those two markets also. Thank you.
Thank you, sir. Next question we have from Mr. Sandesh. What are the competitive advantages or entry barriers for other players which help EKI sustain the growth of the company in future?
Yeah, so as I have mentioned earlier, our core service is related to the providing advisory services for the carbon credits. For those specific thing for the buyers, one specific thing that we do have very unique in with us is the trust that we have created in the buyer segment. That means the buyers comes from the developing nations, and the seller. I just want to correct my answer. The buyers are located in the developed economies, and the sellers are located in the developing economies. Since we are providing our services for last 15 years in the developing economies, we do have very good rapport network with the seller of the carbon credits. Plus, we also provide the additional services to them is to get the project registration and verification, wherein each project registration verification used to take at least 1 to 2 years timeline. For that specific technical manpower which is required to deliver all those services is a very good and unique thing that we do have. We can provide services to any methodology, any project which is located in any developing or developed nation. We would be able to supply our services very easily. Another thing is once the carbon credit would be generated, the thing is to sell the credits, because the sellers are only majorly looking for getting the revenue. They are not very much happy to get only registrations and verifications. Since we are there in this industry for the last 15 years, we do have very good connect in the international buyer community based at approximately 40 nations, when we can supply the credits, whatever we do generate, or we can whatever the trades that we do can happen with those specific buyer network. So these are the two specific competitive advantages we do have with the buyers and the sellers of the carbon market. Further, having investment capacity is the third good thing we do have with the organization.
Thank you, sir. So, looking forward the time limit, I will take up the last question for this call. I request the other participant to kindly mail their queries. We will surely revert on that. Last question we have from Mr. Lalit Agrawal. What is average cost of carbon credit we generated or purchased?
So it is very difficult to determine the average prices because the credits which comes from the solar power project, from the wind power project, from hydro, from forestry, from cookstove, from other different technologies, they do have various different price ranges. It is very difficult to determine the average buy and sell price for us. Thank you.
Thank you, sir. So with this, I would like to request Mr. Manish sir for his closing remarks. Sir, over to you.
Yeah, so I sincerely thank each one of you for joining this call. Your participation and commitment are vital to our success and energize our work. Thank you very much. Over to Mohit.
Thank you, everyone. Thank you for your presence and the